You're taught to go to school, get a job, and get a paycheck. You're not taught to how to get rich.
It's no secret that many people are concerned about their financial future. In fact, according to a study by Lexington Law in 2023, 26% of Americans are worried about spending more than their annual income. Another study shows that 2/3 of Americans would struggle to come up with $1,000 in an emergency. What do these statistics have in common? The vast majority of Americans have no idea how to achieve financial independence. They work their butts off, live paycheck to paycheck, rack up credit card debt, and don't have any savings to speak of. This is a scary position that many people are all too familiar with. So, how do you turn things around? In this video, I share 7 lessons on getting rich, which Robert Kiyosaki shared. Let's get started. Number 1, stay within your means.
Who wants to live below their means? I want to live the best life I can possibly live. So I talk about this often. I use liability. If I want to buy a new Ferrari, I first buy an asset, and the asset pays for the Ferrari.
Many experts will tell you, to be rich, you must live below your means. This is an idea that pushes you to spend less than you earn. In theory, it seems okay, but if you want a rich mindset and be rich, living below your means will get you to only a certain point. Quoting Kiyosaki, it's a poor mindset that says to live below your means. When you have the mindset to live below your means, you only focus on spending less than you earn. You don't focus on expanding your means, you only look at how much you spend on certain stuff. You should be expanding your income and your means rather than cutting down on your expenses. Of course, you should not spend every penny you get, but you also shouldn't cut down on necessary things like food, entertainment, and so on, just to save a few more bucks. The fact is that one cannot clip enough coupons, buy enough of the cheaper paper towels, or seek out the less expensive gas station often enough to create lasting wealth. That just doesn't work. Yes, you can save up some money, but you will need more to have a better life in the future. When you think about spending less than you earn, your thinking gets too narrow, and you lose sight of your dreams or what you want to do. So Kiyosaki says instead of asking, how can I live below my means? Ask, how can I expand my means? Rather than focusing time and energy on living below your means, use those same faculties and resources to become educated and secure some big investment wins, thereby extending your means. You can only cut out so much to the downside, but there is unlimited growth upside to extending your means. Number 2, work to learn. Don't work for money.
So really that's the lesson. When you look at a job, you look at what can I learn more than how much can I make. And I think that's the biggest challenge. And if you look for a job where you can learn a lot, the harder the job, the better it is.
Yeah.
Another rich dad lesson from Kiyosaki is that work can be used as a platform to improve your skills. In other words, work to learn, don't work to earn. If you think about life, the first 20 years of your life are spent being a child, having friends, growing up, going to school and college. In the next 40 years, you will work and contribute to the economy and society. And for the remaining 20 to 30 years, you will retire and enjoy your retirement according to the average lifespan of a person. So, if most of our time is spent working from our 20s to our 60s, would it not make sense to do work that you enjoy and is fulfilling? That's why Kiyosaki said you should work to learn, which means finding a job where you can grow and learn life skills, which are broad skill sets. To illustrate the importance of a broad skill set rather than a single great skill, let's take McDonald's as an example. Anyone can make a better burger than McDonald's. Still, McDonald's makes huge money from average burgers because they know good business. Not many people know about the business system outside of the line they work in. By learning while you work, you will be much more knowledgeable and possess unique skills to improve your professional situation. As Kiyosaki said, you only need to know a little about a lot. It's not feasible to have extensive knowledge about every aspect. Learn about accounting, investing, markets, the law, sales, marketing, leadership, writing, speaking, and negotiating. If you learn valuable skills at work, they might be useful for you in the future. Moreover, you get to earn while learning and practicing your skills. So the next time you are looking for work, it would be a good idea to figure out which one will be able to teach you important and valuable skills. Number 3, the most important lesson is cash flow.
So that's one of the big things my rich dad taught me is you got to control your cash flow. You want the money flowing into your pocket, not out of your pocket.
Cash flow is what is known as passive income, which is the lowest tax type of income. According to Kiyosaki, successful investors make millions by investing in cash flow. This means money is consistently coming in, and they don't have to worry as much about the market's short-term direction as those focused on capital gains. The core idea of investing for cash flow is to build wealth steadily to leave the rat race or prepare for retirement. This model is also used for building capital, assuring you of a continual income at specific intervals. For perspective, let's look at the case of John. John retired in 1994 with $0 million in his account, but he had $10,000 in monthly cash flow from his real estate investment. Since his monthly living expenses are only $3,000, he's technically financially independent. The cash flow from his investment was more than enough to pay for his living expenses. Today, he has roughly 14,000 real estate investment units, and each one pays for the next. That cash flow also keeps money flowing into his bank account. In this case, John earns his cash flow from real estate investments. By renting a property out, you can start making money from day one as soon as you get a tenant into the property. There's no need to wait for a property to increase in value to see a return. Financial independence doesn't necessarily mean having hundreds of thousands or even millions of dollars in savings. Instead, you increase your monthly cash flow until it exceeds your living expenses. If money is a constant source of stress, cash flow may bring you the peace of mind you seek. If you enjoy this video, share it with your friends. They might find it helpful. Number 4, cash flow quadrant.
And this was another lesson my rich dad would give me. So real quickly, this is a cash flow quadrant, You have E stands for employee, S stands for self-employed or small business, or specialist like a doctor or a lawyer. B stands for big business, 500 employees or more, and I stands for insider investor.
The cash flow quadrant is a term coined by Kiyosaki that represents different methods by which income or money is generated. As you can see, each quadrant represents a different way of generating income. Some people generate income from only one quadrant, while others generate income from all 4. As Kiyosaki advises, the 2 quadrants on the right, business owner and investor, are the primary paths to financial freedom. These quadrants require specific skills and mindsets unique from those in the other quadrants. Let me explain more about the 4 quadrants. The E stands for employee. An employee has a job. This is where most people earn their income. What matters most to the employees is security. They believe investing is risky, so they shy away from risk. Due to that, they don't see the need to learn about money or how it works. For them, education is about learning the skills needed to get a steady, high-paying job with great benefits. The S is for self-employed. Many employees tire of their lack of control and choose to work for themselves. This category of people also likes the idea of security. Still, they have a larger tolerance for risk and thus don't mind working for themselves. They like it that way because they feel in control of their future, but they find delegating hard because they feel no one can do it better. So they own a job rather than a business. The B stands for business owner. Unlike those in the S quadrant, business owners don't own a job. They own a system or a product that makes money even when they aren't working. They know they can't be successful on their own, so they look to hire people who specialize in the skills needed for the business and hire those who have more talent and skill than them. The I stands for investors. Investors have the highest financial education of anyone in the cash flow quadrant. They are good at finding assets that provide steady income in the form of cash flow, and they often use other people's money to attain those assets. The ideal path to financial independence is to move from quadrant E or S into quadrant B and quadrant I. Number 5. The rich don't pay taxes.
Let's start with this one first, keep it small. Is here you go to school, get a job, you become an employee, but you learn nothing about taxes. Then you become a little entrepreneur, you start your little falafel shop business or whatever you start, right? So that self-employed, small business. And then you have big business, 500 employees or more, or I for investor. So Tom, how much tax do employees pay?
Well, typically if they're making a good salary, and this is, by the way, the same rates around the world, typically it's going to be about 40%.
40%. And after the Trump tax cut, did that change much?
Not much.
Kiyosaki warned that our wealth is designed to be stolen by taxes and inflation, and that statement has no gain. The rich pay very little in income taxes because they don't earn their money as employees do. They know that the best way to avoid taxes legally is by generating passive income from the right side of the cash flow quadrant, the business and investing sides. If you earn your income on the left side of the quadrant, which is employee and self-employed, the only tax break you have is to buy a bigger house and go into greater debt. However, the rich have scores of tax breaks offered to them by the government to encourage investing and business development, which generates more jobs. The rich can make millions of dollars and pay virtually nothing in taxes. This situation exists because rich people do what the government wants, in the sense that everyone needs a job, so they don't need a tax break to be incentivized to do that. But not everyone dares to invest and start a business that employs others. The government creates incentives for those who do so via tax breaks. In a nutshell, you need to be on the right side of the cash flow quadrant to evade taxes, just like the rich. That way, you can save more money. Number 6, learn how to read a financial statement.
So when a banker asks you for your financial statement, they want to see how smart you are here. So let me tell you why school makes students poor. So really simply, it's this. Let's say I have a master's in arts, Master of Arts degree, right?
Yeah.
Or a Bachelor of Arts degree.
Yeah.
Do I learn anything about income?
No.
The reality of life is that money doesn't make you rich. What makes you rich is your financial IQ. For instance, give the same $100,000 to a person with a low financial IQ and a person with a high financial IQ, and you'll see vast differences in how that money is spent and grown. A basic but crucial skill is understanding a personal financial statement at the heart of the difference between high and low financial IQs. Simply put, a personal financial statement records a person's income, expenses, assets, liabilities, and cash flow. Understanding these key metrics is essential for understanding one's financial situation and accessing investment opportunities. While taking an accounting class will teach you how to read an income statement and balance sheet separately, these classes don't teach why one document is important to the other or how they affect each other. As Robert Kiyosaki pointed out in Rich Dad, Poor Dad, how can you tell what an asset or liability is without the income or expense column? For Rich Dad, understanding the relationship between the two allows you to see the direction of your cash flow, which can help you determine whether something is helping you make money. In a nutshell, controlling your financial life can be a cumbersome task if you don't know how things work. An effective practice is to analyze how much you earn and spend every month. By following this method, you become aware of where your money is coming from, how much is leaving your bank account, and how much you can save. Number 7, C students can be successful.
So let me ask you this question. When you were in school, were you an A student or a C student? Were you the star of the class or the flunky of the class? And if you weren't the A student, then did that mean you couldn't be successful?
In today's world, academic success does not necessarily translate into financial success. A high GPA does not guarantee prosperity in the real world. Some people with high GPAs usually work for those at the bottom of the class. The situation is that thinking creatively, taking risks, and learning from failures are often more valuable than following conventional paths and seeking security. Picture this. John and Mark were high school classmates who graduated with excellent grades. They were hardworking and dedicated students, earning straight A's and aiming for prestigious Ivy League colleges. However, while John followed the traditional path of academic excellence, Mark had a different vision for his future. While John buried himself in textbooks and focused solely on academic achievements, Mark honed his entrepreneurial skills and started a small digital marketing business during his senior year of high school. With his knack for digital content creation and entrepreneurial spirit, Mark built a brand for himself by reaching out to local businesses and helping them market their products and services online. As he gained real-world experience in business, he learned key concepts such as marketing strategies, financial management, and customer relations, knowledge that cannot be acquired solely through academic study. Fast forward a few years. John and Mark have graduated from college. John graduated with top honors from a prestigious university, while Mark's digital marketing agency thrived. However, John struggled to find a job that matched his high expectations and abilities. The job market was competitive, and he was just one of many high-achieving graduates competing for the same jobs. On the other hand, Mark's entrepreneurial journey made him financially successful. It gave him invaluable experience and skills to carry with him for the rest of his life. From this scenario, you can see that the ability to think creatively will allow an individual to come up with innovative ideas and solutions that challenge the status quo and catapult them to great success rather than being stuck in the rat race. And that's a wrap on the 7 Rich Dad Lessons for Getting Rich, as outlined by Robert Kiyosaki. Applying these lessons can help you achieve financial freedom and build a life of abundance. What's your take on these lessons? Let me know in the comments section. If you enjoyed this video, like, share, and subscribe to my channel for more.